presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 3 p.m. Eastern Time. We got 1 hour left to go in trading, and we got markets pulling back in the red. Right now, you have the S&Ps approaching session lows. We're off 15 points right now. You see the slide early this morning. We're up to 64.40, and as I mentioned at that top of the hour update, we're going to get some volume today. We'll get into it. S&P is off by 0.2% right now. NASDAQ 100 barely in the red. The Dow off 213. You have UNH trading lower in a big way. But let's start it off with some price and volume. And boy, it is remarkable when you compare it to that volume that got ahead of the volatility to the downside. We were talking about it for some time. And folks, this puts it in perspective, okay, in terms of the massive amount of volume that we're getting on that period of time. And right now, though, we've done 862,000 contracts all of yesterday. You did 915,000 contracts. Day prior to that, Friday, 773,000 contracts. So we're going to put a big number up today. We'll see how the day finishes, but you're going to have some volume. Same thing in the NASDAQ 100. Check it out. Well, let me back it up. NASDAQ 100 right now, you've already done 455,000 contracts. That's one of the highest 3 volume days in the last 10 days, and we still have an hour to go to trading. So it's going to be a big number right now on the markets. Yields in focus right now. Got to update that. That was this morning. 10-year at 4.4. That's what I sent out with Market Insights this morning. Well, we're at 4.33. 7 basis points shaved just like that. We got lower yield, and the dollar's holding up well. Okay, there is almost no pullback. Yes, you have a pullback from 99.1 to 99.8, but we're right where we were at 7:30 this morning on the dollar. So that's going to be an interesting one if you actually get a little bit of a separation. Yields pull back. Is that going to be enough to weaken the dollar with what's going on right now? That is the relationship that usually takes place, but it's not a guarantee, and it's not happening today. And gold, up $15. Now, as I mentioned, you rolled over on contracts. Okay, so yesterday we had the contract of the prior trading near 33.15. You roll over contracts, you get a boost. We're trading right now at 33.82 on gold, up $15. And yeah, you jump over to silver right now. Silver up by 14 pennies at 38.36. All right, let's jump around to some of the news of the day. Pretty decent headlines. Now, we have some equities that are trading lower. I talked about UNH yesterday, folks, a lot. They have a lot going on, to put it lightly. And the Medicare fraud, okay, if the news stories are true and everything they write is pretty profound, it seems like it's pretty criminal fraud to the tune of tens of billions of dollars. And they're only talking, so for what it is, right? Nonetheless, their numbers last night, even lower. We're off by $16.50. That's dragging down the Dow today as well. Okay, one of the other headlines. We'll jump to a couple. We're talking about tariffs. So first we talk China. You have the Treasury Secretary saying that the U.S. and China will continue talks over maintaining a tariff truce before it expires in 2 weeks. Okay. Headline, the U.S. and China agree to continue talks on the tariff truce extension. Any conversation is good conversation to make a deal. The more interesting one is Commerce Secretary Howard Lutnick coming out and basically saying, we got to figure out all the details of this U.S. and EU deal. Folks, the devil's always in the details. This is why trade deals like this usually take years. Now, doesn't mean it's going to blow up, but the devil is always in the details, right? Says there's plenty of horse trading left to do. He expects to continue discussing issues like digital services, taxes, and the attack on U.S. tech companies with the European Commission's trade. So everything's negotiable if those details are still there. That's a risk that you should keep your eye on. They're going to seek to clinch a non-legally binding joint statement by August 1st that will expand on some of the elements negotiated. Still non-binding, and they have a lot to work out. It's a good deal that it's done. But I read that, and I'm like, yeah, so they're going to get a non-binding by August 1st that will expand some of those elements. So, nonetheless, in focus. All right, NVIDIA. Let's jump over to NVIDIA shares. So they give back some of the gains this morning. You trade about $3 off the highs. And I was talking about this morning that you're almost at the level. NVIDIA this morning was at about 4.36, almost $4.4 trillion. That's almost the combined value of Apple and Amazon. Staggering. And then, yeah, I'm not the only one commenting on the run, as in more billionaires getting added to the ranks when you have a company worth that much money, $4.3 trillion. 2 more NVIDIA executives have gained that 10-figure, what's it, the 10 comma, or no, the 3 comma club, the 3 comma club, right? Silicon Valley, for those that watch that show, the 3 comma club. And you're talking about here the chief financial officer and Jay Puri, Colette Kress and Jay Puri, who oversees sales and marketing, each are worth more than $1 billion. The bulk of their fortunes in NVIDIA stock. Yeah, the first $4 trillion company. And what I will say is, it's been quite a one-way trip, folks. We're going to come up, we're going to talk to our man Basil Chapman next, and we're always talking about the indices, and we're talking about the weeklies and the peaks, and there are no pullbacks in this equity, man. It just goes one way to higher prices, and you're talking about more than doubling in value over a period of less than 4 months, from $86 to $176. And how many red bars? We got 2 tiny red bars in that entire run for a weekly basis, and even those bars, right? No sweat. One of those bars you actually even finished higher from the week prior because you gapped higher. The other one you were low. Remarkable run for NVIDIA. And on a volume basis, lighter volume since the week of June 23rd. Okay? This week of June 30th, you had July 4th in there. But since then, you can see we haven't matched that volume when you accelerated to about the 160 price point. You put things on a daily on NVIDIA. Yeah, a little bit of sell on July 22nd. But this market's been lightening up on volume. But that hasn't stopped it. And the last thing we'll jump over to is the VIX. Now, we were talking about this morning. No reason to put any fear in things when you have the VIX at 1480. Well, it's at 1571, man. So, yeah. There's a little bit of fear jumping in this market when you have the VIX up almost 5%, just like that. Folks, stay tuned. We got the S&Ps off by 14, NASDAQ 100 off by 9, Dow off 206. We're coming back with our man Basil Chapman. Don't go away, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We have the S&Ps right now. We're negative by 16 points. We have the NASDAQ 100. We're negative by 18. The Dow off 225. And right now, folks, we're going to talk to our man, Basil Chapman, as we do every Tuesday at 3:15 p.m. Eastern Time. And, folks, if you head on over to the front page of TFNN, you will see Basil's opening call right on the front page. You can click that button. You can sign up, folks, whether it's for a month. Over here for $149, 6 months for $695, you save almost $200 or 22%. Or a year at $1195, you save $593 or 33.17%. And you get a 30-day money-back guarantee with all of it, folks. You gain access to a number of outstanding webinars. We always talk about this, but check it out right now while we're talking to our man, Basil Chapman. Basil, good afternoon.
Good afternoon, Tommy. How are you?
I'm doing fantastic. How is beautiful Boston on this lovely Tuesday? I hear you're getting a little heat, maybe.
Hot.
Yeah,
a little hot. Playing tennis yesterday was a little bit strenuous, but it was fun anyway. It's good, preferably summer than winter, as far as I'm concerned.
For sure. So, what do you think about this market, Basil?
So there are a couple of things going on. First of all, for anyone new to my work, I always try to identify the lowest low bar and each successively higher peak, alphabetize them, A, B, C, D, E, F, G, or uppercase on the way up, lowercase on the way down. And if I get a buy signal that's upgraded to a buy mode, say in leg B, anticipated that at least there'll be 4 higher peaks going to a D, and then we have to assess what's next. So it's a real simple technique, but it can get a little complex when you get to a stage right now. So here we are. We've got the peak D in the Dow at 45,016, just a tad off its 45,073 all-time high. You've got a leg E in the weekly chart. It's very different to many of even the IWM. The Russell is only in a leg D in its weekly chart, and this one's also starting to stall at the top. So we just today, I had certain parameters. I didn't want to try to pick the bottom of any short inverse ETF. I wanted to try to get it where there's a move to the downside, making new lows, and there may be a slight move to the upside at a certain level to at least start a short. Rather than try to pick the exact bottom, I wanted to get it just off the bottom. So today we actually started a short in one of the S&Ps. One of the indices is actually the S&P. It went to a leg D. There's no indication right now. The high is 6409.26. And the technicals are mostly very positive, so it really has to be bad news that's going to be influential. But if you look at the QQQ, look at this, This is a leg E. If you look at the SMH, and the only thing I've got here is the Chapman wave methodology. This is also a big spike to the upside to an all-time high, the little doji candle. So I'm watching this very closely. So tomorrow, one of the things I always talk about is markets don't go down. They have these like one-offs, a sudden sharp move down, then closes off the low or even at the high of the day. But to have a sustained move, it's imperative that there's a news event that starts to permeate the market, and then the news starts to accelerate. And if you only get that when it's something that the market has listened to and decided that that is negative. So at this particular point, we don't have any negative news. So if it's Powell tomorrow, who's in a kind of a difficulties in a quandary, because he has economic specs historically that he has to look at without projecting forward. He has to look kind of backwards before he can look forward. If he sticks to his rigor, we don't know, but there's a chance that he might not say anything that really impacts the market positively. So that might be the only thing that I can see on right now that says there's a news event, and you just mentioned, and we saw this today, the TLT turned around from being quite kind of so-so in the morning to sharply higher, up $1.32. Therefore, the TBT, the inverse, is down sharply. So that's yields. That's important. But if you look at the bigger picture, you'll see that we're just in a trading range for yields. So I'm saying it has to be something that the market perceives as bad news. So within that context, what I've been doing for subscribers is we haven't been going for any of the biggies right now, meaning the indexes to add to anything like that. We're waiting for some kind of a pullback to add to our positions because we're still long the Dow. Here it is close to all-time highs. We're long GE, but GE is also stalled. Look, it's right here. It makes an all-time high today, but it's right at an area that could be a little double top resistance. The other one that I use as an indicator, because it's right in the broker-dealer area, is Robinhood. So GE, we're long. Robinhood, we're still long. But 113.44, just a week and a half ago, peak F. And now it's kind of stalled. This is Robinhood. If you're looking at Microsoft, all-time high 3 days ago, didn't quite make it today. Nothing wrong other than the Chapman wave notation. But if you start to look a little deeper at Microsoft, the MACD, the moving average, has been going down. The relative strength is a little weak. Stochastic is actually under 80%. So I'm looking at this and saying there's an opportunity for the market to pull back. However, what we've started to do, yesterday we got 2 new positions, and we've been avoiding some of the areas that we're already in, and over the last couple of weeks, we've got low price positions that have actually done very well because I wanted to conserve some money so that we can either be looking at the short side or new positions. But I decided that looking at some sectors are actually holding pretty well. And I picked 2 stocks within each sector that is not one of the high techs. And so far, these 2 stocks are up from where we bought them yesterday, but one has earnings out tomorrow, and the next one has earnings out on Thursday. So we'll see if they can hold. But these are going to be also dividend stocks, and that's important. We don't usually do that sort of thing. So I'm looking for the chance, because I don't believe that it's worth getting a dividend stock if the capital is going to depreciate because it goes down. I only want to buy it if there's a chance that both the equity you're looking at goes up and you're going to get the benefit of a dividend. So I've got fairly tight stops on these. If they hold, I think that's going to be just an inkling to me. Give me an idea that we're starting to see what I've been talking about, a slight broadening out of the market. And you can even look at something like a Shopify. Look at that. It just got clobbered. It went from 176 in November down to 23 in November 21. And in 22, it goes down to 23.63, and it's come back very nicely. But now it's starting to stall. So I'm saying there's been a rotation through different sectors. And some of the stocks that we're just looking at most recently are stocks that have had the same very poor price movement up until last week or so, and they just started to find some strength. So I'm being very selective, and as I say, we've just started a short position with a very tight stop. But I think that I want to be ready just in case the market doesn't like anything that happens tomorrow. But as I say, to get a move that goes 4%, 5%, 6 or 7 or 8% down, you really have to have this bad. Look at every single decline. Remember the April one from a year ago with the semis and everything making those high techs. I pointed out those round number highs, and then we got a sharp pullback because there was that fear of higher tariffs, etc. Higher rates. So we're going to be watching this very closely. So I'm ready for anything. We kept our long positions, but we're going to start adding a short, add to the shorts if necessary, and keep these new longs.
Great information as always, Basil, and we got some big earnings. Maybe those earnings creep in like you're talking about, but I hear you on the news. Folks, check out the opening call. Basil, thanks so much. We look forward to the program tomorrow.
Thank you, Tommy. You too.
We'll be right back, folks.
Tend to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps off by about 18 points, and as you see, coming down near the session lows. Right now it's 64.05. NASDAQ 100. We're down by about 30 points, or 0.1%. Dow off by about 0.5%. And right now, folks, we're going to jump over to our man Tim Ord. Folks, you can reach Tim every trading day at his website, ord-oracle.com. And then you can check out, of course, he's got a couple of great webinars right here at TFNN.com. You hit the services tab, and then you'll see the 6 secret ratios every trader should know. And we talk about some of those, as well as the secret science of market tops. Check those out as well. Tim Ord, good afternoon.
Good afternoon. Good afternoon. Actually, this first chart, we actually had a listener that emailed me that he wanted to take a look at the Russell 2000.
Perfect.
Basically, so I thought I'd cover it real quick before we start on the S&Ps and gold market. But anyhow, this chart is a monthly chart, goes back to 2018. And anyhow, we broke above that beginning of end of last year, couldn't hold it, fell back, went down to the previous highs. And if you notice, the volume really jumped up here. That's a sign of weakness off of a high. And that's usually a not good sign. So you compare the down volume off that high and what the volume do going against that decline. And if you notice here, you can see the volume is actually lighter. This is the down volume, or this is the up volume right now as the market's been rallying here over the last 3 months, and it's not as high as the down volume.
Sure.
So you got weaker energy going to the upside, and so you broke the previous high. This high is back in 2024. You broke it here, couldn't hold that high, fell back down, got support at the previous highs of 2022. Now we're going to try to break back up. Well, this previous high of 2000 actually is 2020. Excuse me, or at 21. It's 2021. This high here is 2021. Anyhow, you broke above that high, couldn't hold it, and you fell below it. Now you're trying to rally above it. You actually got resistance right here, right now, on a monthly chart, and you don't have volume high enough to push through above this level. I'm not saying today's the exact high, but we're in the vicinity of the high. So if you don't have volume really pushing up at least equal compared to the down volume here, you're going to fail. And it's probably going to fail right around this 220 area. And you're going to go back down probably to the previous highs, and what happens there, don't know. If the decline is actually if the decline on volume-wise, this is a monthly chart, is relatively light going down to there compared to the volume going up. You compare that to volume going down. If the volume's lighter than the up volume, then most likely you'll find support again right in this, looks like about 285 area. So I think the Russell 2000 is peaking this vicinity, and but nothing really huge, probably back down to the previous low. And so we'll see how that works out. Actually, the previous low did break below it, but it didn't hold it. But anyhow, I'm looking for 185, probably between now and October or somewhere in there, because I think the S&Ps are kind of hitting a high here. But anyhow, that's that. So
I tell you what, would you mind refreshing maybe what you have your charts with Al, Tim? We have your charts. The right side was cut off a little bit on whatever you're sharing with him. I have the full charts if we need it. But for some reason, the right part of that chart that was showing that he has... Do we have it now? Let me see. I'm sorry. I'm checking it out. Yeah, for some reason... And it's okay if you don't. I have the full chart. All right, we can just keep going, and you can try it at the break. But I have the full charts up, and they can see it as well. So go for it.
All right. So we're going on to chart number 2?
Yes.
Are you handling it, or am I handling it?
Yeah. Well, we can see your charts, but it cuts off, unfortunately, about half of the chart to the right for some reason. That's all that's getting shared there. I don't know the settings. But I can see what you're doing. We can see what you're doing, but that's all. So I have my charts up, and the producer can take it from me, or, yeah.
All right. I showed this chart last Thursday, and the top window is the 10-day average of the ARMS index. Readings above 1.2 are bullish, readings below 0.9 are bearish. Last Thursday it was 0.88. Today we're 0.92. This is not exactly pull the trigger when that hits 0.9 or below, but it gives you in the vicinity of a top. And if you notice, if you look at all of those pink areas going back to May of last year, you're getting close to the top. And we had that close to the top, even though the market kind of bumped up here over the last several days. It's still bearish, so we're running into a top. You know, what day is the exact top? Don't know.
Okay.
We're pretty
and
close.
I tell you what,
to
we're
it.
gonna take a little break, just a couple of minutes early. We'll take the break instead of normally at about 39 past, and that way you can take a look at the charts. And we'll come back with Tim, folks. We'll finish up this conversation. We'll talk about the trend, and we got a lot more to talk about with Tim Ward. Don't go away. We'll be right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. And yeah, we got it figured out with our man Tim Ward, and we got markets selling off a bit as we took that break. S&P's now off 25 points at 63.98. All right, and I know we got everything going, Tim. I know you put those charts together and you like to annotate them and just kind of go over them, so that works out well. We can see everything now, so let's go for it, man.
All right, so do you want to go back to the Russell 2000, or we just...
No, because I had that one up. I think we were good there. Let's just go to the second chart, yeah.
All right, well, anyhow, the top window is 10-day trend. Last Thursday was 0.88, 10-day trend above 1.2 is bullish, below 0.9 is bearish. On this chart, I noted in pink the times that it hit 0.9 or lower. And it kind of gets close. It gets you in the vicinity of the high. I'll put it that way. So I watch it pretty closely. And last week we get 0.88. We're at 0.92 right now, and we still pushed higher, even though the trend did hit below 0.2. I'm still looking for a pullback here. Excuse me. Here's I kind of presented this the other. This is kind of interesting. This is a weekly SPX. And this is a weekly SPX tilt ratio. We kind of covered that before. Usually the SPX tilt ratio leads the SPX. And if you notice, over the last 3 weeks, this ratio is actually trending down. It was actually bullish all the way up into recently here. Then finally turned bearish about 3 weeks ago, even though S&Ps have made higher highs. The ratio has basically made lower highs. So that's another sign. This is a weekly chart. So you got the ARMS index. Now you got the SPX tilt ratio. So have I got a short signal yet? No. Kind of waiting for volume to kick in. But I do got, if you have to be in the market, you actually have to be short. Because usually when I get two different indicators that are totally unrelated to each other, the chances for a top or a bottom are really high. So we're not going to screen through the summer going straight up here. At best, we'll go sideways. But I think we're going to, here's what I think is probably going to happen. We're probably at a high in this vicinity, and I think we're probably going to go down and test the breakout area. We went through the February highs with the sinus strength. We had 245 million shares going through a previous high of 170 million shares. That's a break. That's a sinus strength through a previous high. And once you do that, that's usually 90% of the time it's a breakout to the upside. So I'm officially saying, yeah, we'd have broke out to the upside. Everything's bullish, but we're probably going to pull back over the next month or two and form probably a sideways market going in an October time frame, maybe a little bit before, maybe a little after, but probably this sideways movement that I'm calling for here is probably the B wave of an ABC up. In other words, B waves a lot of times mark the halfway point of the move up. If you do the statistics on that, it comes around 740, which is a big run up coming. So this is a consolidation just in an uptrend, not a top of any consequence other than the pullback to the February high. So that's how I see the S&Ps. Am I going to end up with a short signal in this vicinity? You know, hopefully I'll see it in the next several days. I'm no hurry to short because a lot of times these shorts, I don't know, at bottoms they ring a bell, at tops they don't. If just when you get everything kind of lined up for sell, the market manages to push higher. That could still happen here. So I'm kind of watching how volume's going to be this week. If volume's really light this week compared to last week, like 10% lighter, then I could end up with a sell signal on Friday. If it's not, I'll probably wait till next week. So that's kind of my trigger. Okay. I don't know how much time we got anyhow.
Yeah, we got plenty of time here because we took the break early, so we can keep going. But I was just going to say that, I mean, the TLT... And I love the charts and the pullback because, yeah, that day on the TLT, we're up $1.41, man, which is a remarkable move today, up 1.6% today alone. And the VIX as well, right? We just went from a 1470 to a 1607, which is quite a jump. I mean, we're down 23 points in the S&P right now, but we were only down like 15 points in the S&P, and the VIX had already climbed from 1470 to 1570, which is a decent climb when you only have the S&P down 15 points.
Yeah, actually I got out a couple of weeks, actually mid-July, because the VIX was making higher lows, and all of a sudden it starts making lower lows. That's the trouble with tops. Sometimes they kind of go away as far as signals go. So that's why you're kind of extra careful. But anyhow, yeah, the VIX is starting to show some bearish signs here too. But this one on the weekly time frame, since I'm looking at the weeklies, is foretelling. Can it hold up another week or two? Maybe. But I think we're getting close. You know, today I don't think so, because normally these signals come at Friday on the close to make you sweat over the weekend. So that's that. Let's go to the gold market. This is keep presenting this. This is the XAU monthly chart, RSI at 72, over 72, marked all the times in the past going back to 1988. we really hadn't done anything since mid-April on the GDX. We hit, I think, around 53 on GDX in mid-April. We're still around that vicinity. It really just stopped going up, kind of going sideways. A lot of those gold stocks, however, did pretty well. Here's another chart I presented this last Thursday. This one works pretty well. It's a very rare chart. You don't get very many. I mean, it looks like you get one every 2 years if you look at the time sequence between these signals. But when they form, they're usually pretty good. Last time we got one was 2022. Now we're in mid-2025. We got another one. It's a RSI of the inflation-deflation ratio on the weekly time frame. So it's a pretty rare signal, and we're getting one right now. Still expect a pullback on
and
GDX.
Can I ask what that, because I'm just not familiar with even that, the inflation, deflation. So what would that mean to, in terms of where we are right now with that type of a spike in terms of what it's showing for inflation or deflation, kind of?
Inflation's gone up too fast compared. Normally when everything's calm.
Okay.
Yeah, when everything's calm, this thing won't get a signal. But when inflation way outperforms deflation, in other words, inflation's going up too fast, that it just measures the ratio. So everything is like a stretched rubber band.
Sure.
The more you stretch it, the more it comes back at you. And it actually works on everything. That's why I use Bollinger Bands. It gets beyond the outer Bollinger Band too much. It's going to snap back to the mid Bollinger Band. This is just another one of those RSIs, kind of a stretch of the acceleration of the inflation-deflation ratio. It's gone up too fast, too quick in that time frame. And it works just as well. If you notice, you can pick out bottoms with this thing too. If it gets down below 30, it's kind of hard to line, but I picked out that low there. So it works the same way. But you put all that stuff on the chart, it gets too messy, you can't read it. So I just labeled all the highs, or the RSI got above 70. So it's not, to me, it's the big ones I think are going to correct, and that's the reason why I put a couple on these gold stocks. My opinion, the best way to pick a good gold stock is look on the monthly chart. You have to have a sign of strength through the mid Bollinger Band. I presented this last time, and it has to be a sign of strength. And that's the reason why I put these circles around the volume here. It has to be a sign of strength going through the mid Bollinger Band. Then when you get 80% above the mid Bollinger Band, that particular run has run its place due for consolidation. Last time that happened, came back here. If you notice, it's about 80% above the Bollinger Band. You consolidated for, several months before it took off again. Now you're back above the mid Bollinger Band. Here's some other times 80% above the Bollinger Band on this month back here in 2020. Happened again in, looks like, October, November of 2019. So it works pretty well. So this one, even though it took a decent run up, it's due for consolidation because now you're above 80% above the Bollinger Band.
Sure.
Here's another one. This is I don't know. I'll do symbols, ABBRF. So now you're 100% above the Bollinger Band. It's due for a consolidation. Started back in 2024 around, looks like about 25. You're up around 4 range right now. Last month it above Bollinger Band, but you're only 25% higher. So I mean, it's not like running away from you. Also, you got the RSI up here. Here's one I think you ought to pay attention to. This is Dolly Varden Silver Corporation. It's a monthly chart. The symbol is DVS. I think I might have presented this one. Yeah, the only reason I'm pointing this out, this is because right here. This is a huge sign of strength. And if you notice, this stock haven't done anything since 2016.
Nice.
It's virtually, just gone no way. Matter of fact, here's the one. XKMI is kind of another one. It went sideways for a number of years and finally broke out. Went from 17 to 30, it looks like about 30 over the last several months. I think this one's going to go back up to around 8 here pretty quick. So
those are some remarkable stocks, man. The run up for sure. Silver having quite a run up, of course. with some of those equities. Tim, I appreciate the education, the time as always, man. We look forward to talking to you on Thursday, and have a great couple days.
All right. Thank you. Talk to you
Thanks
then.
so much.
Thanks a lot.
Folks, stay tuned. We got one more segment. We're coming back, and we got markets in the red right now. We got the S&Ps down by 17, NASDAQ off by 35. I'm coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, and we got UNH right now, down by 6.9%. You are at session lows right now. And yeah, it's quite a cascade to lower prices, and who knows where this thing will fall. And I just posted a couple links in the Tiger's Den, which are articles I've been referencing from July and August of last year that the Journal was writing a series on. Those are free articles that I just posted in the Tiger's Den. If you're not in the Tiger's Den, folks, come check it out. It's $1 a year. We only do that to make sure that we keep spammers out of there, verify your identity, basically, get you in this great trading room. But yeah, I can't help but keep thinking about it, man. It's going to be interesting to see where this one falls, because they have some answering to do, and it looks like they're finally going to have to pay for some of their sins. But we know how this goes sometimes in corporate America, right? But this one just doesn't quite make sense. $50 billion on Medicare, just visiting people, diagnosing them with conditions they don't even have. And boy, that is quite a chart. And technically, you know, you can't diagnose this one technically, folks. Okay, yeah, you're not going to have the volume you had in May. And I guess you could make the case that you have a consolidation in the area of $250, which you spent, and you did for 2 years. Okay, so if you're going to pick anywhere, it's $250, folks. And that's where sometimes a chart like this, right? You want to go long on UNH? Hey, there's the case, man. All right, you go long, you set your stop somewhere below 250. Because if it doesn't find a floor there, you know, you're talking about the lows, but boy, they got some issues. And it's not stopping. Look at this. And the whole market isn't selling off like this. UNH is down by 7% right now. Microsoft flat after pushing almost 518 earlier in the session. Nvidia gives back some of that record territory, down by 0.8%. We jump around to Meta shares. Ooh, okay. They're taking some off the table in Meta. Look at that one. Not AMD, up by 2.2%. Amazon down by 0.8%, and Apple shares off by 1.3%. Those are some big numbers for some of those tech companies. And we have some volume in there as well. Folks, thanks so much. Have a great night. Have a safe night. I'll see you back here at 9 o'clock tomorrow morning for the morning market kickoff. Have a great evening, everybody.
Building wealth